Start with the, it is 1st July 2005. Almost all questions start from there. You are an audit supervisor with Walsh and Company. Okay. You are currently reviewing notes in relation to internal controls in place at your client Whittaker Company. So we are Walsh and Company. Our client is Whittaker Company. Whittaker Company manufactures and sells luxury bed linen wholesale to hotel trade and direct to the public from its factory store. It has an year end of 31st August 2005. Sales. Company implemented a new sales system in May 2005. The new system was fully tested prior to its implementation and will be run in parallel with the old system, right? So that is what we want. Okay.
Yes.
So that's a good control. Okay. A new system running along with an old system is a good control. Clear. Okay.
Yes, ma'am.
Pitaka company's IA department is responsible for comparing the output from the old to the new system. So they are comparing the output as well between both the
Systems.
systems. Clear? So that is also a good control. Clear now?
Yes, ma'am.
Investigating any discrepancies, making recommends for further action. So that is what we are going to start with. New system and the copy paste of the same. Okay, so in case of double A, if you are thorough with just one format, the remaining format are relatively very easy to go on. Clear? Now,
Yes, ma'am.
what is the purpose? Next is the purpose or impact of what this control would have over the company, right? So, if you're going to keep this way, what happens? It is going to reduce any error, right? Any error that might cause during the transfer, okay? Or
Yes.
any loss of data during the transfer, right? Okay?
Yes.
By actually implementing the new system, right? Okay? So there is no error. There could be no misstatements in the accounting records if a system is introduced like this. Clear, no? Okay?
Yes. Yes. Got it.
So in short, we're going to say it like, just a moment. Okay. In short, we are going to say that this would reduce the loss of data or the data not being processed correctly with the operation of the new system. This would also reduces the risk of processing errors and misstatements in the accounting records. Clear?
Got it.
Now, how do you test it? So first of all, as an audit team, we are going to review all the procedures and documentations relating to the test that has been performed. They say a test is performed, right? So you're going to review everything. Clear.
Got it.
And then you're going to agree that test, okay, whether or not the tests were appropriate, or even after that, were there any errors, or or if there was error, it was fully investigated and resolved. Clear, no? Again. So what does the audit team do as a test of control? It's just same as the auditor's response. Clear. In this case,
Got
it
it.
is not risk we are dealing with. We are dealing with controls, right? So what should
Hmm.
we do? We are going to review the procedures, okay? And also all the documentations related with the test of the systems. Clear. Okay.
Got it.
And we are going
Yes.
to agree whether or not they are appropriate. Okay. And they said that they were testing discrepancies and stuffs, right? So we are going to include that as well. So we are going to include like if there was any errors that has been identified, how was it investigated and resolved? Clear now?
Yes.
Okay. So in simple words, it would be forming like this. The audit team should review the procedures and documentation relating to the test performed and agree that the tests undertaken are appropriate and any errors have been fully investigated and resolved. Clear, no?
Got it.
Okay. Now, what we can do at hand is we can observe, because the chances are the system is running parallelly now also, right? At present too. So what we are going to do, we are going to see whether all the new transactions that has been entered into the system, we are going to observe how it is being transferred to the old to the new. Clear?
Got
Okay.
it.
And we are going to agree that the information is correctly processed. Okay. And the outcome is same in both the systems. Okay. So instead of using the word same, I would use consistent. Clear now? Okay. So for new transactions entered into the system, observe the transaction being recorded in the old and new systems and agree that the information is processed and the outcomes are consistent in both systems. Clear no?
Got it.
Okay, next one. The company operates a fully automated credit check process, fully automated, for all its new hotel customers. The automated system generates a credit limit for each new customer, right? With the
Yes.
sales director, which the sales director approves before customers can place any orders, right? The sales director evidences approval of credit limit in the system. So there you have your copy paste. Clear now?
Yes.
Okay. So next is credit limit checks. Just a moment. Now it is C plus P.
Mhm.
Okay. Same thing. Okay. Now, what
Oh,
does this ensure? This is going to ensure that there is no loss of revenue due to the sales that is made to less credit worthy customers, right?
yes.
Okay. So this in turn would prevent us from our recoverables, our receivables being irrecoverable. Clear, no?
Yes. Yes. Yes.
Clear? So that is the first thing that we gain from this particular control, or the purpose of this control. Clear, no? Objective of the control. Okay.
Okay.
So in the controls
Yes.
chapter, there is control objective, right?
Mhm.
Okay.
Right.
Yeah. So control objective is the same thing that you are specifying here. Clear?
Okay.
What I say purpose is basically control objectives. Clear, no?
Okay.
Okay. Now next. Next is that if the credit limits are automated, okay, there is no biasness, or there is no partiality in giving credits, right?
Yes.
That is, every customer would be treated the same. Clear?
Yes.
Okay. And it is also going to, the automated system is also going to, it's make sure that appropriate credit limits are set. Okay.
Yes.
And the receivables become recoverable in the end of the day. Clear? So that is also
Yes. Yes.
another objective of that particular control. Clear?
Okay.
Now, the test of control. So what does the audit team do? The audit team is going to select a sample of customers. Okay. And there is a credit check in the system for those customers, right? Okay. You're going to take the
Right.
sample of customers, sample of new customers. Okay. And in the information in the system, you're going to see whether the credit limits check has been performed for those customers. Clear?
Got it.
They say new customers uh, are people who are who are checked by their credit limits, right? And it is automatic in nature. So you're going to pick
Yes.
a new sample of customers, clear, no? And you're going to make sure that their credit limits have been checked, clear?
Yes, ma'am.
So the audit team should select a sample of new customers and confirm by reference to the information in the system that a credit limit has been performed. Limit check has been performed. Clear?
Got it.
Understood, no?
Yes, ma'am.
Okay. Now, they say that the sales director has to approve these things, right? The credit limit.
Mm.
The credit limit
Yes.
is actually generated automatically by the system, but the sales director is the person who is going to click yes or no to that particular thing, right? So the
Yes.
audit team is going to review that all the credit limits which has been signed off is actually approved by the sales director by way of signature. Okay, before that customer order is actually carried out. Clear, no?
Yes.
Okay. So whatever I have said, I'm going to frame in my own language. The audit team should also review that the sales director has approved the credit limits by way of signature before the customer order is placed. Clear?
Got it.
Okay. Now, next thing that we are going to do is that we are going to take a new sample of customers. Okay. And then we are going to take
Okay.
their first order. Clear? Their
Okay.
first order. And you are going to make sure that a credit check has been performed before their first order has been actually placed. Clear? For the new customers. Okay?
Okay. Mm.
Understood, no?
Got it. Yes.
Okay. So that in own words, for a sample of new customers, obtain a copy of their first order and agree that a credit check has been performed before the first order was placed. It could be similar to the answer at the back, or it could be different with the own words. Okay.
Okay.
Some answers might have the fixed terminologies of audit that we use, some does not. Clear?
Okay.
Now, next, let's see. On a monthly basis, the receivable ledger clerk downloads aged receivables report and reviews it for outstanding debts, which is a very good thing. What is aged receivables? Aged receivables means those receivables which are very long overdue. Clear?
Okay. Yes. Unpaid.
Yeah, so those are called age-old receivables. Clear?
Yes, ma'am.
So the company has a monthly basis of report, aged receivables report, right? So they where they're going to review the outstanding debts. In line with the control policy, any debts which are greater than 30 days overdue are then passed to credit control department, which contact customer to resolve any issues and recover the debt, right? So this could
Yes.
be said as an aged receivable review, right?
Yes. Right.
Clear, no?
Yes, ma'am.
Then we have the copy paste. Okay. So what does
Okay.
this regular review say or indicate? That there is a regular review going on. Okay. There is also follow-up actions, right? By the credit control department. This is going to make sure that all the debts of the company are duly collected. Clear?
Mm.
And likewise, that we have mentioned earlier, it is going to prevent irrecoverable debts. Clear?
Yes.
Okay. Now, this is also going to ensure that if there are any irrecoverable debt, because they are directly contacting the customers, right? So that means if there
Yes.
is any irrecoverable debts among them, it should be accounted for appropriately. Clear?
Yes. Got it.
Understood, no? So
Yes,
this
ma'am.
is the next. objective? What is the reason behind this?
Ma'am, you are having a lot of cold and cough. Like,
Yeah,
we can
yes.
discuss this part, like, we can complete this part of control and test of control. Then control deficiency, we can do it tomorrow also.
No problem, no problem.
Like,
You can do it because I don't want to delay your classes so that you have ample time in preparing your own.
yes,
Okay. Okay. So the regular review and the follow-up actions by the credit control department ensures that all debts are timely collected and also reduces the risk of irrecoverable debts. This would also ensure that irrecoverable debts are identified and accounted for appropriately. Clear? So what
clear,
does
ma'am.
the auditors do? The auditors are going to ask them about the aged receivables report. Okay. And they are going to see
Okay,
whether this report has been reviewed, okay, by the receivable ledger clerk, right?
okay,
So if he has reviewed, what would there be? There would be his signature, right? So we're going to
right,
check just that the audit team is going to collect the copy of the aged receivables and they are going to confirm that the report was actually reviewed by the receivable ledger clerk, right? And
right.
how must have that clerk reviewed it by way of signature? Clear, no?
Yes,
So that is the next one. The regular review and the follow sorry. The audit team should obtain a copy of the aged report receivables report and confirm that the report has been reviewed by the receivable ledger clerk by way of signature or electronic sign off. That is what usually happens, right? Now,
right.
moving on. Also, okay, that is done. Uh, okay, so here at this time, on a monthly basis, the account clerk reconciles the trade receivables accounts to list off individual customer balances in order to verify month-end receivables balance, right? Any
Yes,
reconciling items are documented, errors are corrected on a timely basis, and then the reconciliations are reviewed and approved by the financial controller. So, whenever you see this particular phrase, you get your test of control then and there itself, right?
yes,
If it is reviewed, it should have been what? It should have been evidence by way of signature. So, you're going to review that. Clear?
yes, yes, ma'am.
The fourth one is receivable account reconciliations. Clear?
Yes,
And then we are going to copy paste. Okay. So what does this objective say, or what is the objective of this control? It ensures that regularly the account reconciliation of receivables are taken are taken, right? Okay. And it is also compared with individual list of balances. See, receivable ledger is a control account. What is a control account? Where everything is put together. Clear? I just want you to understand the FA part of this particular thing. Okay. So
okay,
when we say control account, it is basically a receivable ledger which consists of all the entries. Clear.
okay,
Okay. But there you don't individually mention who is whom. You take everything together, right?
okay.
So we have something called memorandum. Okay.
Yes,
So memorandum is basically individual listings of all the due that are all the amounts that are due from customers. So, for example, if we are a
okay,
manufacturing industry and we are selling our goods to so many retailers, okay,
Okay.
So you're
Yes,
going to
ma'am.
maintain a list of, let's say A, B, C. A is one company, B is one company, C is another company we are selling to, right?
Okay.
Okay, so when the receivable ledger control is there, we are going to take everything of A, B, and C together in it, right?
Okay.
But we are also going to keep a separate individual balances, and that individual listing is called as memorandum. Clear, no?
Okay. Got
It could also be set individual customer balances. That means for A, how much it is there, for B, how much it is there, and for C, how much it is there. Clear?
Yeah, ma'am.
So unlike the Indian accounts, we don't maintain everything, every individual accounts that we have studied in our earlier classes. No, it doesn't work like that. In companies, we have everything together at a point in a general account, and then we have separate memorandum for each of them. Clear? So
Oh,
same
yes,
thing
ma'am.
applies to suppliers as well. Same perspective. Clear?
Okay.
Okay.
Got it, ma'am.
Okay. So such a particular reconciliation ensures that there is a timely reconciliation of the general ledger and the list of balances that you have got. Clear, no?
Okay. Got it.
Okay. This would ensure that all the balances in the FS is accurate. Okay.
Yes. Yes.
This would also ensure that there is no error, and if even if there is error, it is identified on a timely basis and is actually corrected before taking them into the accounting records. Clear?
Yes.
Okay. And also the
Yes.
review or a review from the responsible personnel would also further make sure that every reconciliations done are correct. Understood?
Yes,
Okay.
ma'am.
So financial, the purpose of financial controller here is to ensure that whatever reconciliations have been done, it is actually correct. Clear?
Yes.
So,
True.
if there is a regular reconciliation of receivable accounts and list of individual customer balances, the receivable balance present in the FS would be accurate. Okay. This would ensure that the errors, if there any are identified on a timely basis, are resolved, making the accounting records accurate. Okay. The review of reconciliation by the financial controller ensures that the reconciliations are accurate. Understood?
Understood.
Okay. Now, what does the audit team do? Okay. So it has been told that there is reconciliation happening, right? Okay.
Yes.
So the audit team is going to obtain and review all the file that is kept of the receivable account reconciliation. Clear?
Yes.
And why is that? So that the audit team knows that if they claim it is monthly done, we can just see the receivable account reconciliation file and see whether what they have said is being performed. That is monthly reconciliation. Clear, no?
Got it.
Here we are not checking the amounts and stuffs. Here we are going to make sure that it is being carried out on a monthly basis. Clear?
Got it.
The audit team should obtain and review the file of receivable account reconciliation and confirm that the reconciliation have been performed on a monthly basis. Clear?
Yes.
Okay. Now,
Yes, ma'am.
so there is file for receivable account reconciliation where there are many reconciliations done, right? So what we do is we are going to pick samples from it. Clear?
Okay.
And when we do receivable reconciliation, when we do supplier reconciliation, when we do bank reconciliation, there could be differences, right?
Yes.
So that differences are called as reconciling items. It's a new information. Clear? It's
Yes.
called reconciling items. The variations in the variations when we do reconciliation, it is called reconciling items. Clear?
Yes.
So what we are going to do is we are going to take the sample of the receivable reconciliation account and we are going to take the respective reconciling items mentioned. Okay. And we are going to confirm that all those errors have been corrected. Clear now?
Okay. Got it.
Okay. So that is the second test of control that you do. Understood?
Yes, ma'am.
I think it's Friday, so the network is really down. Okay. So for a sample of receivable account reconciliation, trace the reconciling items with the supporting documentation to confirm that the errors have been corrected. Clear?
Got
Now,
it.
we are going to take the easiest part of this at all, this all. That is, they say that there has been a review conducted, right? So we are going to take the sample of receivable account reconciliation and we are going to see whether the financial controller has actually signed or reviewed and signed off this reconciled items. Clear?
Got
And
it.
in the modern times, a sign could be physical signature or it could be an electronic thing. Clear?
Correct.
Okay,
Yes.
so for a sample of receivable reconciliation, confirm that the financial controller has reviewed reconciliations and approved by way of signature or electronic sign off. Understood?
Got it.
Okay, next we are going to move towards deficiency. So we need 5 deficiencies, right?
Yes.
Deficiency is the simplest part because there you just need to identify what is not there and say it should be there. So this is the easiest part. Clear?
Oh, yes, ma'am.
Okay, let's see. Whittaker Company has a human resource department which is responsible for processing joiners and leavers, right? Including preparing and sending authorized joiners form to payroll department so that new employees can be set up correctly to payroll system. However, when additional staff are required at short notice, okay, so up until here this has been a good control, right? Okay, there is a joiners form and stuff, there is good. Okay, but what happened when there is on a short, it is on a short notice, what happens, the joiners forms are not completed. And instead the production supervisor notifies the payroll department by email that they commence employment. So there you have your first one. Clear?
Ma'am, you are having a long cold. Like, if you're not feeling well, we can, can take it tomorrow also, this one.
This part can we take tomorrow because I'm not able to.
Okay. Yeah, yeah, I